I knew the first question would be like, how are you even going to do it? Right? इतने पैसे कहाँ से आएंगे? Something that kills a lot of companies. But college students in India don't have access to any form of credit. They are not eligible for credit card. You're looking at your bank balance every single day and seeing how it's depleting, and you're trying to figure out how long you can make this thing run. The most excitement for me was when that first customer found our app on the Play Store without being referred by anybody, and we are today considered among the top 5 digital lenders in India. I had an MBA from a top business school. I was leading the cushy corporate life, working in one of the largest asset management companies in the world. And then this problem came about that I had to solve. And that's how I built a multi-crore business that is serving people across the length and breadth of India. Hi everyone, my name is Gaurav Jalan. I am the founder and CEO of mPokket's. mPokket's is an app-based lending platform that provides small ticket credit to the underserved youth of India. I grew up in Calcutta from a Marwadi family. My parents were businessmen, and I always saw that side of life, what it's like to build a business, to face those challenges, to move ahead despite the problems. And that was always my aspiration. Fairly normal upbringing in a relatively smaller metro in the country. The big turning point in my life came when I decided to pursue my education outside the country. It was not an easy decision. This is back in 1995. I was 16 years old, just gone into class 11. From a fairly kind of moderate family in terms of financial means. When I went with this decision to my parents, it took a lot of thinking, right? I knew what questions would come. I knew the first question would be like, how are you even going to do it? Right? इतने पैसे कहाँ से आएंगे? मतलब, we are of moderate means. There is no way we can finance your education. And I was prepared with the answers, right? I knew that this is what I wanted. I had decided that. Why did I decide that, right? At that time, all my friends were pursuing IIT, right? So I was in the science stream, the typical, after 10, you go into science for 11, 12. Everyone who's doing science is doing IIT tuitions, preparing for IIT, and that's the path to success. But for me, what was more alluring was a different way of thinking, a different culture, a different setting, new viewpoints. That's what interested me. And I decided that I wanted to go to the US to pursue my higher education. So, parents didn't have the means. They said, look, if you have to do this, you have to do this on your own. Find a way to do it. So I started, obviously looking for scholarships and financial aid. Did my MBA from a top business school in the US. And unlike everybody else who, after you do an MBA, and again, the financial means were still meager. It's very common when you take an MBA, you take on a whole lot of debt and you take a loan to actually do that education. Same thing I did. And then most people work after the MBA, right? They get a good job so that they can repay that debt. I made the decision to come back to India. So this was another decision that baffled my parents, especially. They couldn't understand what I was doing. They were very happy with what I had done till then, but they were very concerned. I've got this huge loan to repay, and I'm coming back to India and getting a good job, yes, but at a much lower salary. So, how does that work? I used to read in the newspapers about, what the Tatas are doing, what the Ambanis are doing, what they're able to achieve. And that is what I always wanted to aspire towards. Like, why cannot I build something that will be as impactful, that will be as large? And those are the goals that I worked with. So that's what led me to come back to the country, because if anything, I want to build something in India, because that's where my heart is, right? So I spent about 5 years working at a top asset management firm. But then eventually, as I said, for me, it was always about, what can I do? What can I build? And that's where I started looking at, what problems are out there? What is the environment like? What do I need to solve? When I actually went from India to the US as a college student, again, as I was very short of money, right? I was there on financial aid. I was there on a scholarship. US law doesn't allow an international student to work more than a certain number of hours a week. So to earn money, I was working the maximum number of hours that was allowed by law. You had to work on campus, so you couldn't get some of the higher paying jobs that were outside campus. But you do what you have to. And so end result, you're always tight on money, right? But even as a new fresh student who had come from India to the US, I was able to get a credit card there. It was a very small line. It was only $200, right? Within today's rupee terms is equivalent to about 16,000 rupees. So it was not a lot of money, but it really helped me manage my finances. And then I come back to India and I realize as an Indian college student from India, I can get a credit card in the US. But college students in India don't have access to any form of credit. They are not eligible for credit card. So, why is this the case? Why should this be the case? It's not like a college student in the US is inherently more responsible or anything of that sort, right? It is just that nobody had ever thought about this problem and tried to solve it. And this was the same time when smartphone penetration was exploding in the country. So this I'm talking about 2015. That was the time that Jio had just launched. They were rapidly cutting internet prices. Smartphones were becoming cheaper, and literally now every person had a computer in their pocket. This was opening up a whole new world, where you could now reach people without opening branches, without having a huge sales force, and that was game changing. So I put these two things together. There is a problem that exists. There are college students, a whole lot of them in this country. There are about 4 to 5 crore college students at any given time in this country. And that's a very large population, and they don't have access to credit. And now I have a way to reach them, potentially. So that's how this business started. That's how mPocket came about. Even as I was in the US, pursuing my MBA at a top university, I always knew in my mind that I wanted to eventually go back to India. The question was always, what is the right time and how should I do it? It was not an easy decision because there were a lot of factors involved and there were a lot of people involved in the decision. I was married by that time, so my wife was living with me in New York. My parents were still in India, but they were very concerned, obviously, as a son about what I'm doing, what decisions I'm making, how that's going to impact my life. So this decision was particularly difficult also because there was a big financial angle involved. Now, to do an MBA in the US is a fairly expensive proposition. You have to take on a lot of debt to actually pay the tuition fees. Making a decision there to come back to India right after my MBA would mean a few things. One is financially, how do I now pay down this big loan that I have, considering that salaries in India are much lower. So if I come back and get a job in India, even if I work at a very good company, the salary levels are much lower. So how do I repay a dollar loan with rupee debt? And secondly, it's just, the lives involved. I had got married, my wife had just joined me, she had done a course, she had got a job. So what does it mean for her career, for her aspirations, for us to return back to India? So it was not an easy decision to make. If I were to try and explain what we were trying to build at mPocket, very simply, lending is actually a very basic business. You are giving somebody money, you tell them that they have to give it back to you after a certain time period, along with some extra money, and that is your income. Now, the tricky part is, forget about that extra income you're asking for. What if this person decides to not give you the money back at all? And that is the fundamental of any lending business. It is about, how do you get customers to repay? It's a very common saying that in lending, disbursing money or giving out money is easy, but getting it back is hard. And that is the fundamental challenge that I had as well. And that I was struggling with right from the beginning, right? I mean, why does this business make sense? And solving that problem alone would make this business successful. So how did we do it? I think initial days, as I explained, fundamentally you have to start with the belief that people are honest. So did we have a share of fraud? Sure. I mean, there were initial days when, we found that somebody had, taken the Aadhaar card of their roommate and created an account and borrowed money, and then eventually we were following up with the wrong person for repayment, right? So these kind of things are, fraud of any kind is very common, and we faced it as well. But I think fundamentally at the core, what we saw was that people were using this service properly. They were finding it useful. And the most encouraging thing was that we saw a lot of repeat customers. And that is what actually told us that this business makes sense and that we are actually helping the customers, because the biggest proof of a customer being happy is when they come back to you to use your service. So the idea for mPocket was there, but there were more questions than answers, frankly, at that point. Everybody I spoke to about the idea actually discouraged me. Fundamentally, the thought that everyone had was the business did not make sense because if you gave money to a college student, they would never pay it back because they don't have the means to do that, and because they will not have the intent to do it. I mean, they will not care enough about the money or be responsible enough to actually make that payment. And so therefore everyone thought this business was dead on arrival, right? But that's firmly something that I did not believe. For me, at the core, having been through that phase in my life, I knew that if we convinced people, in this case, we're talking about college students, if we convinced them that we were providing something of value, that it would have a positive impact on their lives, that they could use it to positively impact their daily life, and that it would improve their financial discipline, it would help them build a credit score that would make them financially independent earlier in life. If we could communicate these things to people, they would truly find value in what we were doing, and therefore they would not try to defraud us. That was the strong belief that I had. It was an open-ended risk, right? This is a business that would consume a lot of capital. In lending, money is your raw material. In the steel business, you are buying iron ore, you are converting into steel and selling it. So in other businesses, there are other raw materials. In lending, money is your raw material. So you have to, if you don't have money, you can't do business. If you want to grow, you actually need more money to grow. So money literally makes money here, right? So obviously I knew that going in, and I knew that it was going to be a capital intensive and a money hungry business. So actually starting with a small pool of capital, and I wasn't backed by any big, either a family fortune, or I didn't have any big investors backing me at that point. Because as I said, I mean, we did speak to people. It's not like I did not try and go out and try to raise money. We made those pitches. We went to the accelerators. We went to the angel investors. We spoke to all of them. But there was a lot of pessimism about the whole idea, about whether it could even be successful. So there was a lot of risk involved, but eventually it was my belief that I can make this work and that is worth solving. The initial years were, like it is, I think, for any other startup. It was not easy. It was me alone. I got a group of, 2-3 people, initial people who I could convince to come in with me to do some work. But, it was a customer. I still remember when we got our first customer who actually, we've built our mobile app, we put it on the Play Store. The first customer who downloaded the app and applied for a loan, it was such an exciting day for me. I actually called up that customer to speak to them, to understand how they found out about us, why they were taking the loan, why they needed the money. Initially, it was my dining room until my wife kicked us out and said, hey, you get a space if you want to do this anymore, because I'm not going to let you sit around at home all day. So and we ended up renting. Again, money was a big constraint. You literally don't have any, you're looking at your bank balance every single day and seeing how it's depleting, and you're trying to figure out how long you can make this thing run. So found a 200 square foot kind of a very small room that was there, put a table, 3 of us sitting around it, making calls to customers, trying to do their KYC, trying to onboard them, trying to make sure the bank transactions go through so that they get the loan money as soon as possible. Then at repayment time, trying to figure out if someone's not repaid, why have they not repaid, that entire process, right? So literally everything that is there in the company today, in some form, it emanated from my early experiences of going through this process and talking to customers. So talking through their need, why they're doing things, what problems they're facing. I mean, that's how this business got built. The biggest problem, as I'm sure any new company will face, is how do you get people to join you, to believe in what you're doing, so that you can grow your business, right? Because eventually, no matter how good you are, how talented you are, how hard you work. There are only so many hours in a day, right? So you cannot achieve everything yourself. You have to find people who will work with you and who believe in what you're doing, and so they will work with the same passion and help you achieve the vision that you have. And that's the biggest challenge, frankly, because when you're small, when you don't have money, I mean, how do you get people to believe in this crazy idea and this crazy thing that you're doing? So no easy answer there. I mean, if any of you are looking for it, I mean, it was a process of literally, going through LinkedIn profiles, connecting with people, convincing them, going, meeting them, telling them why they should come and, work with you, try and solve this problem. So we do not have any offline presence. It's a mobile app that a customer has to download. Every interaction they have, including, submitting documentation, borrowing the money, repaying it, asking questions, everything is done online. And it was the same at that time, right? So the core when we started this business was to decide how would we underwrite, who would we give money to, and how much money we would give. So when you're starting out, how do you even do this, right? I mean, it's never been done before. There is no other lender in India who's giving these kind of loans to college students. There were education loans, but that's a very different product, right? You're going for a 4-year college degree, you go apply for a loan that is for a few lakh rupees, your parents will be co-applicants on that loan, it will be underwritten by them, etc., etc. So we started with 500 rupee loans. And everyone thought we were crazy. They're like, how do you make money giving 500 rupees to somebody? And why will they pay you interest? And why will they not, why will they borrow it for only a month? I mean, loans are usually given for, 1 year, 2 years, you repay it in 12 installments, you repay it in 15 installments, you have 10-year loans, you have home loans. What is this loan that you're giving that you will require somebody to repay in a month's time or 2 months' time or 3 months' time? But for us, it was always about first principles thinking, right? As I said, we didn't have a template. So it was about what do we think will work? Let's try it. And then if it doesn't work, we take the feedback and we modify it and we try something else. One of the key challenges is, you're starting a digital business, you are not a techie. So how do you actually build the tech side out? Again, there were no easy answers here. I went down the traditional path of trying to find a tech co-founder. That's what everybody recommended. That's what everybody was doing. But frankly, I couldn't find the right person. And I didn't want to do something without having the right person there. So I took the other route, right, which is business to karna hi hai, right? That's not optional. So how do I actually build out the tech? So I went and found a IT firm that would actually do this as a service for us, right? Do this as a project. So that's how the MVP or the minimum viable product of mPocket and the first version of our app got built. If you want to build a digital business, if you want to build a digital business off scale, your technology cannot be outsourced. It has to be in-house because there's way too much involved there to be dependent on a third party. And that's where my challenge came in. And how do I find a good CTO to actually manage the tech organization at mPocket? It took me actually almost 2 years of search before I could find the right person. And frankly, I had to set up another office just to attract this CTO to the company because we are based out of Calcutta. No techie wants to come to Calcutta at the peak of their career, right? So managed to find a CTO, but the trade-off was that I had to set up an office in Bangalore, which is the tech hub of India, right? And that's how the tech team at mPocket started out. And to this day, while the headquarters of mPocket are in Calcutta and I sit out of Calcutta, we have an office in Bangalore and that serves as our technology office. We didn't have money sitting in the bank. So what do you do if a money sitting in the bank, you want to grow your business? You'll go spend on advertising. That's how you acquire customers. It's a good way. I mean, your business grows really fast, but the flip side is that you spend a lot of money. Your cost of customer acquisition is very high. And I think, if you read the news today, I mean, that's something that, kills a lot of companies. High costs and losses are what kind of reduce your ability to stay in the business, to persevere. For us, it was always maintaining a very lean cost structure, building a good business, and that allowed us to actually become profitable within 1.5 years of launch of mPocket. And, we've remained profitable since. Every single month, we've turned a profit. And I think that has held us in very good stead because that has meant that in a business where money is raw material, we have not had to be dependent on the kindness of strangers or of outside investors in order to run and grow our business. We have been able to do that with our internally generated funds and profits. One of the key problems to achieve profitability is to achieve some kind of minimum scale. So that trade-off is always there, right? You have a limited amount of funds, and how do you grow the business enough with those funds so that you can reach profitability? I think the way we did that was by keeping the organization very lean. So, within 1.5 years, we became profitable, and that was a great achievement. But that was only possible because of our first principles approach. We kept our cost structure very, very lean. So we were not spending a lot of money acquiring customers. The two key things that indicate that a product is working is repeat usage of a customer and referrals, because this tells you that your existing customers are so happy that they're coming back to you and they're telling other people about you. These were the two things that I think really helped us scale the business and eventually get to that key mark of profitability. And once we reached there, then it became about, okay, now we've established the product, we've achieved what is commonly called product market fit. Now, how do we really scale this business to a substantial size? And for that, it was simply not possible to do it without raising some external money. Because again, you are in the business where money is fundamentally a raw material. If you want to grow the business 2 times, you need to give out 2 times the number of loans, and that money has to come from somewhere. And we're still too small at that point where any bank will lend money to us. So this money has to come in the form of equity. So there actually we were lucky enough to find some early partners and investors who came in and put some initial capital that helped us then really grow the business. The partners that we got on board as investors, other than just giving us money, they really helped us scale the business, right? They gave us ideas, they worked with us, and they helped us get debt lines, etc. That was very critical in helping to grow the business. So in those early days, the first couple of rounds that we did a seed round, we did a pre-series, we did a Series A round. Cumulatively, we raised only about 50 crore rupees in total. And this was, this was basically like 4 years into running mPocket. So compared to what a lot of startups today raise, you read about the numbers, people are raising 100 million or 200 million, 50 million. I mean, cumulatively through our lifetime till now, we've only raised about $7 million, right? And we've still managed to build a business that is of considerable scale, serving more than 30 lakh borrowers across the length and breadth of the country. And we are today considered among the top 5 digital lenders in India. And we've built a business today that has, annual disbursements of more than $500 million, while having raised only $7 million of capital throughout our journey as a company. Today, valuation is a big talking point. I think that seems to be the single metric of success that everyone looks at. What is my company's valuation? What am I valued at? It seems like that is why people are going out and raising rounds and doing multiple rounds of financing. For us, it was, valuation was never the primary objective. For us, the objective as mPocket was to build a business that can serve as many customers as possible, that can provide employment and challenging opportunities to people, and that can generate profits for its shareholders. I feel like today the overemphasis on valuation makes people go out and raise funds even when they don't need to, and sometimes they do the wrong things in order to justify a valuation. So for example, chasing growth in user numbers or growth simply in revenue at the expense of profits. I mean, ultimately a business has to be self-sustaining. You cannot have a business that has a lot of customers and doesn't generate revenue. You cannot have a business that generates a lot of revenue but has so much cost that you are running losses. But unfortunately, that's the place where a lot of businesses find themselves today, right? And that's also because they've tried to grow much faster than they should. Maybe there are a lot of customers that they today have that should never have become their customers because they were ultimately never going to be profitable. And they don't maybe find as much use for a product, but because you've given very large discounts maybe, or maybe you spend a lot of money on marketing, you attracted these people, but now they are not giving you profitable business. So I think this is a trap that everyone should be careful of. And it doesn't eventually lead anywhere. I mean, a headline is only for a day or two, but eventually you live with that business every single day. So I reached this position today because I was able to build the right team. I was able to get the right people along for the journey who've helped me get to where I am today, and get who will help mPocket get to where we want it to be tomorrow. I know that most of you are facing this challenge of how do you attract talent, how do you retain them. Frankly, there's no blueprint and there's no right answer here. I think what is eventually going to count is your passion as a founder. What have you set out to achieve? And how are you going about achieving it? Right? If you get people excited about the possibilities in what you are doing, if you convince them that it will throw up new challenges, if you convince them that it will contribute to their journey as a human being, I think that is what will allow you to attract the talent and eventually build the right team and build a successful business.